Hey guys, hope y'all are doing well. It's another Wednesday options update where I share all my options trade for the previous week. This goes from the previous Wednesday to close of business of Tuesday. So 5 days of total trades. And I just share those with you to share the progress and keep myself motivated to learn and see where I'm doing things wrong, see where I'm doing things right, and all that stuff. So hope you enjoy, hope you appreciate it, and leave me a comment down below, like, share, subscribe, do all that good stuff. So what I'm going to start with today is the closing trades, because this is going to be it'll be a little off because some of these were closed the same day or the next day and within a few days of owning them. So within the same week is what I'm saying. So we'll just start with the closings and go from there. My first trade I did for the week was closing ARC K. That was going to be in the money last Friday, and so I closed it down, took a $241.62 loss, and then you'll see down below where I replaced it with a couple other more puts. So closed ARC K 36 days, lost 241.62. Now, if you guys remember, I did a haymaker. I did a BYSI. It's a biopharmaceutical. Typically, those biopharmaceuticals pay big time premium, but there's a reason for that, guys. So be careful with the biotech. Those things, especially small cap, micro cap ones, they can literally go to zero in a day. And that's pretty much almost what happened here. But luckily it didn't. It dropped over 50%. Remember, the stock price data contract was 13.22. It fell to like 5.50 the next day. Fortunately, I was able to get out for a profit of $4.30 in 2 days. So, like I said, and it just kept falling after that. So, like I said, the biotech, be careful with those. The premiums look good, but they're very dangerous. Closed a spread on IWM. This was a 1 day hold. I did basically a 0 DTE. It was expiring the next day. Did a 217, 218 credit spread. Closed that down for a profit of about what is that, $35 roughly. Don't like really doing that too much, but it could bite you. Like the very next day after this, or I think that afternoon of December 1st, it went down. IWM went down big time. So if you did it again after I closed these ones down, it would have been ugly. Then I closed down a Vizio covered call for 10. Oh, by the way, I don't put these in red. I only put actual losses in red. You can say this is a loss, but it's a part of a spread. And when you get into a credit spread, one side's going to be a loser. So that's why you get into it. You're going to win one side, you're going to lose the other side. And so I really don't consider that a loss. I consider this basically one position, and that one position profited. I hope that makes sense. Closed my Vizio covered call for 10 cents, profited $43 in 23 days. Beazer Homes closed that one down 25 cents yesterday. Profited $29.51 in 10 days. And then today I closed out a bunch of stuff. Rocket for 13 cents, profited $35.68 in 20 days. Intel had the run up, so I got out at 16 cents, profited $35.80 in 20 days. I closed down part of my strangle that I had on US Steel, the call side. Closed that down for 21 cents for $14.38 in 8 days. Closed down the call side on, was that the call side? Yes. Call side on IWM today. For 45 cents, collected $20.59 in 8 days. Another spread that I closed out. It was a 60-55 TNA spread that I had collected $65 on. Closed that down and profited, what is that, $42 roughly in 7 days. And then Smith & Wesson, when they missed earnings, I put on that $15 put for $85, and I closed it out today for $35, so a profit of $50 in 4 days. So if any of you did quick math, that ain't much. It doesn't add up to much, to be honest with you. But market's recovering. Looks like we'll have a lot more topside. I don't know. Don't get me into predictions, but I do have quite a few things in the money or very close to it. But I don't have anything expiring for another 2 weeks, basically. Another 10 days, 11 days, 10 days actually now. So I'll just manage those as they come, and we'll deal with that next. Well, I don't know. Might have some updates on it next week. But ARK-K was the only one I rolled out this week. So opening trades, I opened up a AT&T put out to January 7th, 21 strike, collected $45 for that one. And then the ARK-K, I replaced that in the money ARK-K that I took a loss on, and I sold 2 puts, both expiring January 21st, one at $90.96 and one at $85.96. I think ARK-K did a split, or they paid a dividend. I forget which one, and that's why these strike prices are funny. Collected $179 for the $85.96 and $287 for the $90.96. So that covers the loss plus some of the ARK-K loss that I took on the 105 strike. So I took the 105 strike to a 90 and an 85. Smith & Wesson, sold that one for 85. I already closed that. Viatris, I sold a put. This is a small one. I was trying to get assigned to this, but I sold the December 10th $12 strike for $20. Looks like this might expire worthless. I might let it expire worthless too. So that's a 7-day hold. Vizio, I sold the Vizio call after I removed the cover call earlier. Did a 23 strike for 40 cents, so got $40 for that one out to January 21st. And then here, Turtle Beach, I should have wrote strangle on here. So this is a strangle. I sold the $20 put and the $30 call. Collected about $1. What is that? $1.35. So $135 collected there to January 21st. And then ARK-G, this might be a mistake that I made. We'll have to manage it maybe. We'll see. This is out to December 17th. It's a call. It's a naked call. I was expecting, that's ARK-G is one of the ones that I thought that I might be assigned. I have a 65 strike put on it right now. So we'll see. Right now it ran up to 63.81 today. We got close to my strike already. And but I collected $55 for that. If I have to roll that up, that's fine. Well, if I get assigned the stock at 65, and that would be, I don't know if that'd be ideal. If I got assigned the stock at 65 and this call is at 65, I don't know. I don't know what'll happen at that point if they're both expiring at the same time. So we'll see how that works. So there's all the opens, not a whole lot. But let's check out Premium Cooking. So we'll look at Premium Cooking page, and you'll see December 7th, week ending December 7th, closed 12 positions, opened 8, profit realized of $60.32. Premium sold is $806.21, most of that from that ARK-K roll, quote unquote roll. So total premium cooking right now, $4,524.46. Maintenance margin of 28,900 for buying power usage of 23.84. You'll see the cash balance went from 124.05 last week to 127.18 this week. No deposits, no withdrawals. Net lick went from 119.500 to 121.200, mainly because volatility is getting crushed there. So that's why things are going up. Return on maintenance margin 0.22%, not a big number. Return on net lick 0.05, so essentially not quite a 0.25% in the past 2 weeks. So not ugly, but not the greatest. But I am sitting on a big number, premium cooking. This is what happens when you start rolling stuff too. A lot of these, if you look here, got expiration, almost $800 expiring on the 17th, $762 on the 24th, and $792 on the 31st. A lot of that will be pushed off into January. So these next 3 weeks are going to be interesting how this plays out. Some of it might recover. Some of it I might have to take a loss on. Some of it I might roll. Some of it I might take assignments on. We'll see how that works, and we'll manage that as the time comes. So the good thing about it is I sell usually 30 to 45 day contracts, and there's really no need to panic. When volatility hits, option prices spike. So, that's just going to happen, right? You stay at a healthy maintenance margin, and you can usually have patience. Usually markets bounce back. If they don't, if you have to take it one day at a time, or one position at a time. You can't. There was a day that I was down probably, I want to say $5,000 or something like that, and it was ugly looking. But you just have to have patience. If you're selling your contracts right, you gotta look at a chart, and as long as you're looking at a chart, and you're, usually those support levels hold. There's a reason why there's support levels there, and if you sold it correctly, you should have some support. You should be able to have some patience and wait that out. That doesn't mean in the short term that it's going to feel ugly and look bad, but typically, if you're relying on charts, typically you should come out okay. There's going to be a few things that I'll probably take losses on, because most of the time, the ones that are in the biggest trouble are the ones I totally ignored charts on. So I'll share that with you in the next couple weeks. Mainly Palantir is going to be one of them, and Tupperware is going to be another one. Totally ignored charts on it, and they're offering me the worst chance, I say, or probably best chance of actually having to take stock or take a loss. So anyway, that's enough rambling. Hope you guys enjoyed. Hope you guys have a great week. And here's to more options trades. You guys have a good one. Thanks. Bye-bye. I am not a financial advisor. The information contained in this video is for entertainment and informational purposes only. It is not intended to be investment advice. Please seek a licensed professional for any investment, tax, or legal advice. Thank you.